What is going on YouTube? It's Brendan from Market Makers. Guys, it's the Sunday kickoff show. We got to talk about the charts, talk about what we expect to happen this week. We do have the new CPI out Thursday, so we need to pay attention to that, talk about how it could affect this marketplace. So guys, I hope you had a fantastic weekend, but now it's time to work. Now it's time to earn. Let's jump into the charts. All right, guys, if we look at the S&P here on the weekly, as you guys know from watching this channel, I've been focusing extensively here on the 200, 233 on the weekly time frame. The 200 is my white line. You see this? Look at this supply dump you had on this strong bullish candle. That candle, that weekly candle in the S&P was the strongest pump in 2 days that it had since the recovery from the pandemic crash. Okay, so it goes back 2 years. That's how quickly this marketplace can change in a bear market with high volatility. You can have massive moves in the marketplace. So what we need to look at here is the macro structure. And if you guys are looking at this, because as a pattern trader, I'm always looking for patterns, you have a beautiful double bottom here, right? Now, what do you need for price to go up? You need velocity. You need a reason for price to go up. Oversold conditions, is that enough of a reason? Sometimes it can be, but let's talk about what's happening. So we know that that inflation went up this past month. So if we look at this, I listened to a couple analysts over the weekend. We're going to tie this into how it affects the crypto space, go over all the charts, guys. I listened to a couple analysts, and they're saying they think inflation is going to come down from last month. And then I found this article from Forbes. Coming CPI inflation reports could spike according to most recent forecasts. And so when you just go ahead into the key part here, latest inflation nowcast. So this is a Cleveland Fed, which forecasts GDP, it forecasts inflation. So it is just a forecast, an estimate, okay? The recent inflation nowcast from the Cleveland Fed is disappointing. The nowcast for October CPI is estimated plus 0.7 month over month compared to a plus 0.3% nowcast for September, with the core CPI at plus 0.5% for September and October. These are not encouraging figures. If core inflation is at 0.5% month over month, if sustained, that translates to over 6% year over year inflation. Obviously, the Fed's made up bullshit target is 2% made up by Ben Bernanke in 2012. So you always have to pay more and will always have your paycheck eroded for the advantage of spending more money in the economy, driving GDP, and filling the country's coffers with taxes. That's what that 2% target does for you, ladies and gentlemen, and it only existed as of 10 years ago. I love how they just throw it out there all the time, like it's just always been there in perpetuity for 100 years. Oh, 2%. It was invented 10 years ago by Ben Bernanke. So let's go ahead and look at this, guys, because the catalyst, if the Cleveland Fed, and I don't track inflation as a job. Okay, there are people who spend their whole lives, their whole careers literally tracking with all the movements of the Fed. I don't do that. But what I do know is there's people out there saying inflation's going down, and there's people out there saying inflation's going up. The Fed itself, the Cleveland Fed, is saying it went up. So we talk about catalysts and how they can influence the marketplace. And if you look at this on the S&P, yeah, you have this gorgeous double bottom structure. But what else have you done here as a pattern? Look at this. So you roll down, you pump up, and then you gave back that pump, okay? Right here. You guys can see that? And then what'd you do? You came down more, pumped up, came down more, then pumped up. So when you look at patterns and how price can move, you have this double bottom, but what did you really do? You rolled up, you pumped up, came back down. If you repeat this movement right here, you're just coming down to a new low and then rolling back up. So you could easily just fall down here to our target per chance at 3141 on the S&P, then come back up, okay? And that's when you're fighting your 200, 233. That's one option. The other option is inflation comes in low. The market wants to be bullish. You guys saw that on this recent rally. The market wants a reason to be bullish. Human nature, human psychology, people want to FOMO into assets. They want to believe they're getting the deal of a lifetime and it's only going to go up. And that is a biased human nature, okay? And that happens all the time. That's why so many trading books that you guys have probably read or flipped through at Barnes and Noble, they all have a chapter on psychology. It's very relevant in this space, okay? So we went up, pumped up, rolled back down. This is how you get double bottoms. And we need to see if euphoria builds in the market to give you this double bottom W pattern where we once again will short again, guys, when we find resistance, because you are in a bear market and we've been shorting this whole way down every pump up. And this is a very profitable way to trade, understanding the primary trend. Put your shorts on, take them off when you're in severe profit and you find support. So if inflation comes in hot, we could easily just be legging down. If inflation comes in, light, better than expected, we could see another rally form just like we did on that weekly candle. And then we'll have to get some targets when we see how the candles break out, okay? But if we look at this, the S&P is down 24% right now. And if we go ahead and flip over to the NASDAQ, let's look at the NASDAQ. NASDAQ closed below its 200 and 233 here on the weekly. NASDAQ's at 11,038. Do you see that? So you're below the 200, 233. And if you remember, guys, we've been talking about this as well. If you look at the Russell's below the 200, 233, and it's below its 300. This is why I short the Russell. I short the weakest index that there is. I primarily index trade as far as equities are concerned. And that's why you guys always hear me talking about the Russell. 25 to 30% of the Russell is zombie companies that survive off of loans and debt. So you're below the 300 finding resistance. So this week is pivotal because if you don't get any upward momentum, if inflation comes in hotter again, this is just going to give way, I do believe, and start working our way down towards our 1521 target on that October 31st weekly candle, which runs out to November 7th, okay? That's that candle where we think we will find a tradable bottom on the Russell and on Bitcoin. Going back to the great financial crisis, guys, on the S&P, this is the quadrant we're talking about. So this is the action that we have where we're bouncing. You see this? Getting below the 200, bouncing up, finding support at the 200, 233, bouncing up. And this is where we think we are right now, where price is going to have to make a decision on the S&P resting on the 200, 233. Is it going to fall down, find that 3141, then come back up? Or are we going to get one more little rally up? Okay, one more little rally up. And in this case, you would have had that nice double top. So that's what we're waiting to see what the S&P wants to do here. Does it want to give us this double top structure from another rally? Maybe something like that. So then you have your first top, your second top, and then you break down, okay? Or is it just going to lose the 200, 233? And I'm telling you, a lot of it's going to be based on that inflation metric because you saw how hardcore the market was going to sell off when they realized that unemployment went down. Because remember, good news is bad news. The market wants to rally, and it wants to rally off bad news, which literally makes 0 sense because you don't want an economy cratering for your asset prices to go up. But what people are really gambling on, what they're more afraid of in the marketplace is the Fed tightening. Okay, it makes the cost of doing business much more expensive. It brings the ability for a financial crisis to enter the realm because they can break something such as illiquidity in the marketplace. They could break the bond market. They could break something else that's unforeseen, like we just saw happen with the Bank of England, with their pension funds being double leveraged, buying twice as many bonds as they normally would due to the 0% interest rate. They had $1 trillion in pensions that were going to get a margin call because of the rates going up. Okay, so there's always unforeseen incidents in the marketplace, and that's what people are afraid of. So they want to rally on bad news and dump on good news. So we'll see what happens with that. Looking at the S&P on the daily, you can see here as well, if you look at here on the daily time frame, here's our 200, guys. Daily time frame 200. One thing you should take away from this channel on the equity space particularly, always watch these rallies in a bear market at the 200 because these are just, look at the profits. Massive profits. And you won't get this watching TV and a lot of these other YouTubers. But what you have here, coming down again, you have that first bottom, right? And so you can come back down, make your second bottom. And the question is, do we get any type of catalyst to go back up? And that catalyst would be a better than expected inflation report. With the thought being, well, now the Fed can surely slow down, i.e. also pivot, like the permables want to keep talking about as the Fed pivot. So if that Fed pivot were to come, or even the hope of it to come, you will see equities rally. Inflation comes in hot, markets are going to sell off more, and I think you're going to be going down to that key support level. So we'll watch that. Markets are not open right now. It is Sunday afternoon. SimpleFX, 6 p.m. Eastern Time. S&P's at 36.38. You can trade these markets there. Check out SimpleFX, great sponsor for this channel, $5,000 bonus. The tutorial guide, the link is in the video description for this, as well as BITGET, where we trade all the cryptos, and our Twitter. Check out the video description and our Rumble for all the good information, guys. If you want to join us on our Discord, that join button right underneath this video literally says the word join. You can click that and join straight through YouTube. So we'll watch and see if this slide continues. And when people say we're oversold, I mean, we're not anymore oversold. Technically, yes, you're below the median line, you're in bearish territory, but you can pull down some more if you look at your MFI. You have room to go down. So you definitely could come down and retest this bottom. And then it's a matter of, what's that inflation report going to be? So we may have some pretty flat markets. 4-hour time frame. You guys watching this channel all last week, we shorted all these double tops. S&P, NASDAQ, Russell, Bitcoin, every double top that we could find. And you can see the double tops all printed. They all broke, gave up the majority of these pumps, and now you are oversold here in the 4-hour time frame. You can see you got a demand wick here on the S&P. Again, price is at 36.38. Came right through the 1618 at 36.87. Almost got down to 36.13 at the 2618. Popping over to NASDAQ, like I said, NASDAQ below the 200 and 233, guys. Look at that just supply being dumped on this candle. So very weak closing on the NASDAQ, below the 200, below the 233. Remember when that started happening in the previous bubbles, you get volatility in this range up and down, but eventually you capitulate, and look how close we are to our weekly pattern target here, 618. 10,179, less than 1,000 points away now from this 618. Again, I don't have a time frame on the NASDAQ and S&P, but I do for Bitcoin and the Russell, October 31st to November 7th. So I kept that time frame here for the NASDAQ and the S&P. Give or take, they will be down here around that time. And you can see how much closer this is getting. And that's what's great about patterns, guys. When you draw this stuff out, you draw this out after we had this first key retracement that I needed to plot this. People look at this and they saw this pump and they're like, there's no way it's coming here. There's no way it's coming here. And then look where it is now. Very, very close to coming there. So we'll see how all of that plays. Here on the daily time frame, you can see we had our big red sell-off day, right? Here's our big down bar. Found some support at 10,000 or 11,010. We'll see if that holds. And again, you do have the double bottom structure that's put in right here. Here's your bottom and here's your bottom. So you could get some chop here and there's some candles up, but we need that catalyst of the new CPI to be favorable for some type of rally, in my opinion. 4-hour time frame, once again, the double top that we shorted, and you can see you fell right through it here as well. Let's go ahead and jump over to Russell. Russell did close below its 300. 1521 is the target on the Russell, that October 31st weekly candle. You can see we're once again just bouncing off of our double S curve here, and price is at 1698 below the 300. Will we see an attempt to break up back above it? Or will we see the Russell roll back down further, possibly to the spot 5 at 1618, about $80 down from where it is now. Once it loses that, it'll be on its journey down to 1521. And there's plenty of time. For those of you that are curious, there is plenty of time for this to happen. And remember, that 2-day pump was so fierce, the strongest pump that we've had in 2 years in the indices, okay? And you gave it all back up in another 2 days. Plenty of time to come down in all of these indices. Russell on the daily, we have the gummy worm telling us we can come all the way down to 1558, pretty close to my target of 1521, 1618, and you can just see the price action here, your double bottom here, your W pattern, and then your rollover, of course, on the daily time frame. Let's go to Russell 4-hour. Russell 4 hour, again, double top. Posted the trade, talked about the trade here on YouTube as well as in our room. Posted this trade, excellent short, and look at the target we hit. Respected the fib. 1618, got below it, closed basically right on the 1618 at 1698. And the close was at 1698, spot 27. Again, Fibonacci trading, guys. Come learn these tool sets in our trading room. Money flow here on the 4 hour, you're still above being oversold. And your EFI, your Elders Force Index, which is the force of the move, is still bearish as well. Let's jump over to Bitcoin. Bitcoin Dante's Descent. Again, weekly time frame. The pattern is 100% intact, a candlestick pattern, not a price-sensitive pattern. So again, we got these boxes. This red box is the average of these two previous red boxes for descent, and I have that 1618 at 10,591 based off the trend-based fib. Taking a current wave projection gets you at 11,009. So somewhere between 10.5 and 12K is my price prediction at October 31st candle, and that prediction is staying in place because the pattern's staying in place. If the pattern's violated, guys, people are asking me, how could it be violated? Well, if you break above 25,214, you break the pattern. Okay. But if you don't, you're in this pattern. You have this pattern here, and we have the price target. And as long as price keeps coming down, price could stop at 15K. Remember, this is not a price sensitive pattern. It's a candlestick pattern of 11 bars down, 9 bars up, 20 bars between swing highs. Has not been violated. It's been tracking true since the origin back on November 8th, 2021. So we'll see what the bottom is. I think it's going to be 10.5 to 12K, right there in that range. And then we're going to have a nice 50% projected move back up about 9 bars, because this will be the rally. S&P 3141, Bitcoin possibly 10, 12K. Everybody will think this is the bottom, propel price much higher. And then that pattern's complete, guys. And where it goes from there, it can go down, it can go up. We will be watching it after it starts that movement, okay? Because the idea here is we short it as we have been this whole descent, right? Since I've been talking about it at 48,240, when I talked about the short here on YouTube, when we posted it in the room, we've been shorting all of these pumps up and down, all the way down, and of course longing it as well. But shorting is the primary trend. It is the best way to make money, and we're in shorts right now looking for this further descension to 10.5, 12K, and we will use this pattern to track it. Now, looking at this on the weekly as well, guys, just throwing a simple trend line, which I've done many times now. I see other people doing this on YouTube too, and on Twitter. But you can just throw a simple trend line from the top, connect the second swing high, and you can see where you got rejected here on the weekly time frame. Look at that, like literally on the trend line itself. Okay, it's very weak price action, and this to me just looks like it's going to happen. Okay, whether you come down to 14, 12, or 10, again, I think you're coming down to 10.5 to 12K in that 1500 range. But this looks like it's going to happen. It is simply a matter of time, and you have a few weeks left to make this happen. Looking at Bitcoin on the daily, you can see you're making a series of higher lows here. Price is trying to rise up, and of course, we keep talking about this with the moving averages. Oh, look at this. Remember on the 8-hour time frame, I told you in our grid layout we did 2 videos ago, I said, where would you most likely find support? Remember this? Last video we talked about this, and now you've broken down to find your support here. I circled it, and I said right here in this range, and certainly that's where you bounced off of, okay? But the 4-hour time frame is what I wanted to get to, because this is where all the action is. The 4-hour time frame with our beautiful double top that we shorted this multiple times now. We talked about it on YouTube. We posted these trades in a room. Shorted the first top, caught this descent, shorted it again up here, caught this descent, stayed in the short, and you went back down, okay? So this is how you trade Bitcoin, and now we're down here on the 4-hour time frame. And the key moving averages that are above us, the 200, 233, this is how I first profited very, very well when I came to crypto, was when Bitcoin was crashing last year. Was at May, I think, May with the weekly rolling crashes, and then we had June, we were battling the 200, 233. very profitable trades are up here at this key resistance level, okay? And now you just see Bitcoin ranging. You see it ranging here in this range. I want to see what the markets are going to do with equities when they are going to open, if they're going to continue to sell off. But I think you're going to have a little bit of volatility, but they may be flat the next couple of days, just waiting for that CPI. Are we going to rally based off a lower inflation print, or is it going to be a catalyst for a dump based off the same inflation print or potentially a higher print like being predicted? And here on the 4-hour time frame, you can already see what are you already forming. Again, another potential double top is what you're forming here on Bitcoin, with the 1618 at 19,279 being your potential neckline once again. And you're pumping up to the median line resistance here in the money flow. Let's look over quickly at ETH. Ethereum, we talked about shorting this. People shorted it here. People shorted it here. I talked about shorting it here. Rolled back up, pumped up, and then did what, guys? Collapsed. It collapsed. Remember, we kept talking about this is just making a series of double tops. I don't want to repeat it because I do that a lot in my videos, but you just had a series of double tops. It's all about understanding the primary trend, the market direction, the trading, understanding the macro to trade the micro is very important. And now you're just mid-range bound here at the 382 at about 3161. And you're at 1318 right now. Okay, so you fell down, you pump back up, you could end up just making another double top again. You're just making a series of double tops that keep breaking down, pump back up, more double tops in the range. Price moves in waves. These waves tend to make double tops. Okay, you see it over and over again in price action. And if you understand the volatility range vis-a-vis Wyckoff trading ranges, and you understand the primary trend vis-a-vis Dow theory, you will be able to trade these markets effectively. Looking at XRP, XRP has been extremely stubborn. We've had some excellent shorts here based off the daily time frame. We've had some excellent shorts. We talked about it here on the channel. Shorting up here with the 1618, capturing that decline. Shorting here once again, capturing this decline. And now we've pumped up. Now, where are we at on this? I would look at this and say, you know, this is probably your peak resistance for this range. Let's go ahead and get a trend-based fib here and try that swing low, swing high, swing low. And you can see you're getting rejected right now at the 0.5, which is 54 cents here on XRP. I would anticipate this rolling back down. It's surprising me that it's still lifting off, but you know, these altcoins have the ability to move independently. You do have a double bottom type structure here as well. You could say this is your first bottom, second bottom. So this is your W right here. You see this? This is your W and you're going up. But, you know, this is what it's looking like to me. And if the markets do stay flat, it'd be interesting to see what XRP does. But this to me is still worth a potential short execution because it is moving and the rest of the market is not. Bitcoin is declining, which is basically the marketplace, right? Everything can move independently, but the likelihood of XRP continuing to rise while Bitcoin declines is not very likely in my book. Let's try another trend-based fib projection here, daily time frame. And you can see here you pumped up above the 618. Your 1618 would be at 58 cents. So if you did a trend-based fib projection based off this double bottom type structure, your I guess your rosiest expectation would be a 58 cent target, spot 5868, right up here at the 1618. We'll see if it can get there. It may start rolling over here, and then you will have completed this structure, and this structure would start to falter. You are above your 150 and your 233. There is bullish nature here, guys. This is a bullish breakout here, but it's a bullish breakout in a downtrending bear market overall. Okay, so that's why I don't think it's going to have a lot of legs. You can see your volatility range was very well established here. Big peak up, lots of supply dumped, and then you have your volatility, and you're trying yet again another breakout. Let's go ahead and look at gold. Gold, of course, another beautiful double top. Fell back down. We're back down at 1695. So gold is trying to consolidate here in this range as well. And gold will move back down with the marketplace if and when the market does roll over some more. Looking at silver, silver's trading at 20 spot 13. And as you can see, we had this nice double bottom structure. Silver got rejected at the 1272 at 21 spot 08. And since then rolled back down. We'll see if that trend continues. Now we needed to talk about oil. Because oil, if you look at this, oil pumped up. Remember, we've been talking about this all along, being below the 300, below the 233. Now, what happened? OPEC Plus decided to cut production by 2 million barrels, which in reality, because they have a quota system, translate to about 1 million barrels. So they're cutting 1 million barrels per day, which is the same amount of oil the Biden administration has been dumping on the marketplace. I wonder how they came to that math. Gee, because they do believe that is price manipulation, and it is because we're flooding the market with supply. And if you see what happened now we're breaking back up above the 300, above the 233. And of course, guys, what is this bad for? This is bad for inflation, because if we get back towards $100 barrel oil up here at the 618, you get back up towards that, then we are looking at staying above 8% inflation, possibly much longer. And we have winter time coming soon. Okay, now remember, this is a lagging indicator with energy costs. So maybe the next CPI, if this continues to rise, will reflect the increase in energy cost as well. But it is bad news. And now the Biden administration has to go and beg Venezuela, yet another horrible dictator, to pump more oil, because we could just pump our own oil, but guys, that's a whole nother video, and they aren't going to let that happen. We would rather buy oil in rich dictators and rich fascists than actually be energy independent. So with that in mind, what else is left to talk about? Oh, if you guys get a chance, check out Fractal Trade 15. Everybody asks me where I get my indicators. He's one of the members in our room. He custom designs indicators for our room, which are gifts when you do join. But he has a ton of stuff. These trend gradient moving averages that you guys always see me use, I get them from him. All this stuff is free here on his page. Advanced volume, accumulation distribution, lots of stuff here for you guys. So check out Fractal Trade 15. Again, a member in a room and a fantastic programmer. Guys, I hope you had a fantastic weekend, and more video updates will be coming next week. Look for my video Tuesday. If anything crazy happens Monday, I will get a video out as well. Take care, everybody. Good night and good luck.